Sweden appears poised to respond assertively to Donald Trump's recent tariff measures, signaling a potentially robust countermove against the United States' tightening control over global trade. The European Union, anticipating retaliation, is gearing up for action. Sweden, known for its measured diplomacy, is adamant about not passively observing. Tensions between the U.S. and EU have simmered for years, but recent developments, including Trump's imposition of a 25% tariff on steel and aluminum imports, have escalated matters. Trump has also targeted automotive exports, a critical sector for Sweden, home to global leaders like Volvo, Scania, and SKF, renowned for their advanced engineering and life sciences expertise. Any disruption in trade with the U.S. could have serious repercussions for Sweden, but this time, the country is taking a firm stance rather than just voicing concern. The Swedish government has openly criticized protectionist policies, emphasizing that free trade is essential to its economy. Earlier this week, Sweden's Minister for International Development and Foreign Trade, Benjamin, warned that tariffs could trigger a dangerous cycle, stating, "There is no winner in tariff wars." He highlighted that economic isolationism leads to higher costs, job losses, and market instability. Meanwhile, Trump has been equally resolute, reaffirming his America First policy. During a recent press briefing, he confirmed the decision. Asterisk will be announcing it very, very soon, and it'll be 25%. Asterisk's stance has unsettled EU leaders, who now face tough decisions on potential countermeasures. For Sweden, this goes beyond politics. It's about economic survival. With an economy heavily reliant on exports, and the U.S. as a key trading partner, restricted access to the American market could mean billions in lost revenue. While the steel and aluminum industries brace for impact, the bigger concern is the automotive sector. Volvo, one of Sweden's most recognizable brands, has a strong presence in the U.S., producing models tailored for American consumers. Additional tariffs could make Swedish vehicles more expensive and less competitive. In response, Swedish officials are collaborating with the European Union to ensure countermeasures are measured and effective. The EU has signaled its readiness to retaliate, potentially targeting major American industries such as agriculture, technology, and whiskey. While Sweden supports the EU's stance, it is also exploring ways to minimize economic damage, engaging in diplomatic negotiations, and seeking alternative trade partners to reduce reliance on the U.S. The key question remains: will this escalate into a full-scale trade war, or is it simply a high-stakes negotiation tactic by the Trump administration? Some analysts suggest Sweden and other EU nations will seek a middle ground to avoid further conflict, while others believe Trump's tariffs mark the beginning of a tougher economic battle. At the heart of this issue is Sweden's long-standing commitment to globalization. Unlike some European nations that have embraced economic nationalism at times, Sweden has consistently championed free markets and international cooperation. With major global players like IKEA, Ericsson, and ABB, Sweden's economy is deeply integrated into global supply chains. If the U.S. continues down a protectionist path, Sweden may have to rethink its strategies, potentially shifting its focus toward Asian and Middle Eastern markets. However, Sweden is no stranger to economic challenges. The government is already in talks with trade partners across Asia and the Gulf states, seeking new opportunities in case tensions with the U.S. escalate further. Emerging markets, particularly in digital transformation and green technology, could provide Sweden with fresh avenues for growth. But will that be enough to offset the losses from U.S. tariffs? That remains uncertain. Ultimately, Sweden's alignment with the EU's response to Trump's tariffs is no surprise. The country has always advocated for open markets and global trade over isolationism. However, with America First policies now directly impacting critical industries like steel, aluminum, and automotive exports, the stakes are higher than ever. Sweden is facing a tough dilemma. Should it join the European Union in retaliating against U.S. tariffs, risking further economic strain, or attempt to negotiate its own trade terms with Washington? While the country appears to be leaning toward a united European response, there is hesitation. Sweden has always prioritized economic stability and long-term planning, and as one of Europe's most export-dependent economies, it relies heavily on international trade. Major Swedish companies like Volvo, Scania, and SKF have long benefited from strong ties with the U.S., but Trump's latest tariffs have disrupted this dynamic. With a 25% duty already imposed on steel and aluminum, and potential tariffs on Swedish automotive exports, Stockholm is running out of options. The government has repeatedly stressed that tariffs harm all parties involved and has urged both the US and the EU to seek a diplomatic resolution. However, as tensions escalate, Sweden may have no choice but to take a firmer stance. When Trump announced his latest round of tariffs, he framed them as a way to protect American industries and jobs, declaring, asterisk, from this day forward, it's going to be only America first. Asterisk, while this rhetoric appeals to domestic audiences, the broader implications are more complex. The European Union has strongly opposed these measures, calling them unfair and a violation of global trade agreements. EU leaders have signaled that if the US proceeds with its full tariff list, the bloc will implement countermeasures of its own. This puts Sweden in a precarious position. On one hand, it must stand with the EU to present a strong, unified front in trade negotiations. On the other, Sweden has deep economic ties with the US and wants to avoid irreparably damaging that relationship. Officials have been cautious in their statements, supporting the EU's stance while keeping the door open for discussions with Washington. Sweden's Minister for International Development Cooperation and Foreign Trade, Benjamin Dousa, recently addressed these concerns, emphasizing that while Sweden wants to avoid a full-blown trade war, it will support the EU in implementing a proportionate and balanced response. Asterisk, the introduction of tariffs is worrying. Frankly, we do not believe this is the right path. As the government has repeatedly stated, everyone loses from tariffs, as they create unnecessary economic disruptions and come at a high cost. Asterisk, he said. Swedish business leaders share these concerns, fearing that retaliatory measures could further destabilize the global economy. But what does a proportionate and balanced response look like? Reports indicate that the EU is drafting a list of American products that could be subject to countermeasures, ranging from agricultural goods and alcoholic beverages to textiles and technology services. Sweden has made it clear that any response must be carefully measured to protect key industries without escalating tensions unnecessarily. Despite diplomatic efforts, tensions continue to rise. Some Swedish companies are already preparing contingency plans. Volvo, for example, is considering shifting some production to the US to circumvent the tariffs, while other firms are exploring alternative markets in Asia and the Middle East. The strategy is straightforward. If trade with the US becomes too costly, Sweden must diversify its trade partnerships to sustain economic growth. While this approach makes sense in theory, it is difficult in practice. The U.S. remains one of the largest consumer markets in the world, and replacing that level of demand will not happen overnight. Sweden now faces a critical test, balancing its economic interests while navigating an increasingly volatile global trade landscape. Sweden now faces a high-stakes decision: fully align with the European Union's response to U.S. tariffs or push for a diplomatic solution behind the scenes. Historically, Sweden has favored negotiation over confrontation in economic disputes. But if the EU moves forward with its own retaliatory tariffs, Sweden will likely have no choice but to follow suit. This is not just about trade. It is a political necessity. Failure to align with the EU could risk Sweden's standing within the bloc, something Stockholm cannot afford. Beyond automotive and industrial exports, Sweden's economy also relies on its thriving life sciences and pharmaceutical sector, which depends on international partnerships. If trade tensions between the US and the EU escalate further, research collaborations and medical exports could be at risk. Swedish officials have tried to reassure investors that Sweden remains a stable and attractive hub for innovation, with one government spokesperson stating, asterisk, we are still a peaceful economy and a center of innovation. We will not be shaken by Trump's decisions. Asterisk, however, whether these reassurances will be enough to maintain investor confidence remains uncertain. The big question is whether this situation will escalate into a full-scale trade war or if both sides will find a compromise. Some analysts believe that Sweden and other EU nations may seek a middle ground to prevent further economic strain. Others argue that Trump's tariffs are just the beginning and that the EU should brace for a prolonged trade conflict. Regardless, Sweden is preparing for all possible outcomes, whether that means supporting the EU, finding alternative markets, or engaging in quiet diplomacy. With the U.S. tariffs threatening to disrupt global trade, Swedish companies are scrambling to assess the potential damage. The European Union is formulating its response, but in the meantime, Swedish exporters are left wondering how to navigate one of their most critical markets. The question is no longer whether these tariffs will have an impact. It's about how severe that impact will be and how Sweden can mitigate the fallout. For years, exports to the U.S. have been a major pillar of Sweden's economy. The country is known for its high-quality engineering, automotive excellence, and cutting-edge life sciences industry. Companies like Volvo, Scania, SKF, and ABB have built strong relationships with American consumers, with their products deeply embedded in the U.S. market. However, the 25% tariff on steel and aluminum, and the looming possibility of more tariffs on automotive and white goods, are forcing Swedish firms to rethink their strategies. One of the biggest concerns for Swedish companies is how these tariffs will impact global supply chains. Many Swedish manufacturers rely on raw materials sourced internationally. Even if they do not export directly to the U.S., rising steel and aluminum prices could increase production costs, ultimately making Swedish goods less competitive. This is especially problematic in industries like automotive manufacturing, where pricing is a key factor in market success. Volvo, one of Sweden's most iconic brands, is particularly exposed to the tariffs. The company has a major presence in the U.S., with production plants in South Carolina and a strong sales base among American consumers. Reports suggest Volvo may shift even more production to the U.S. to bypass tariffs on imported components. While this move could help Volvo maintain its competitiveness in the American market, it raises concerns about job losses in Sweden. If other companies follow suit and relocate production overseas, Sweden's industrial sector could face long-term consequences. The uncertainty surrounding U.S. trade policy is also affecting investor confidence. Global stock markets have reacted to Trump's trade policies, with shares in major European automakers, including Volvo and Volkswagen, experiencing volatility. Investors are wary of how these tariffs will impact the profitability of Swedish companies with significant exposure to the U.S. market. If trade tensions escalate further, businesses may begin shifting their investments to regions that offer greater stability and fewer trade barriers. Sweden's response to the U.S. tariffs will be shaped by both economic and political considerations. While the government remains committed to supporting the EU's stance, it is also working to limit the damage to its own economy. Whether that means seeking alternative markets in Asia and the Middle East, negotiating trade exemptions, or adjusting business strategies, one thing is clear: Sweden will not sit idly by. The coming months will be critical in determining how Sweden and the broader EU navigate this growing trade dispute with the U.S. Sweden's steel and engineering industries, like the automotive sector, are feeling the strain of U.S. trade tariffs. Companies such as SSAB, Sweden's largest steel producer, rely heavily on exports to the U.S., but with a 25% tariff in place, the cost of doing business there has risen significantly. This could drive Swedish steel producers to seek new markets, though replacing the U.S. won't be easy. The American market has been a consistent and valuable trade partner, and shifting focus to other regions could take years to offset the lost business. In response to these concerns, the Swedish government is collaborating with the European Union to develop a strategic approach. The EU is already drafting potential countermeasures, including tariffs on American goods like agricultural products, alcoholic beverages, and technology services. However, Sweden has emphasized the need for a measured response, one that protects its industries without escalating tensions unnecessarily. The objective is to signal to Washington that Europe will not passively accept harmful trade policies. One strategy Sweden is considering is diversifying its export markets. With the U.S. becoming an increasingly uncertain trade partner, Swedish businesses are exploring opportunities in Asia, the Middle East, and Africa. These regions are showing a rising demand for Swedish technology and engineering expertise, particularly in infrastructure and sustainable technology. Countries such as China and India are investing in renewable energy and smart city projects, which could open new doors for Sweden's green technology sector. However, shifting to new markets presents its own challenges. The U.S. has long been a major destination for Swedish exports, and finding equally profitable alternatives is no small task. Some sectors, like pharmaceuticals and life sciences, are especially dependent on collaboration with American research institutions, meaning a disruption in U.S. ties could hinder innovation in fields such as medical technology and biotechnology. Despite these difficulties, some experts see an opportunity for Sweden to strengthen its presence in other regions as global trade dynamics evolve. Expanding into Asian and Gulf markets could help Sweden capitalize on emerging economic trends. The country's reputation for high-quality manufacturing and sustainability makes its products appealing to nations seeking reliability. If Sweden navigates the situation strategically, It could turn this trade dispute into an opportunity for broader global expansion. Meanwhile, discussions within Europe continue on the best way to address the U.S. tariffs. The European Commission has been consulting with member states to determine the best course of action, with a coordinated EU response expected. Germany, with its large automotive industry, is particularly keen on ensuring that Europe takes a firm stance. While Sweden's economy is smaller in comparison, it still plays a crucial role in key industries and will likely influence the EU's approach. The main question now is whether there is room for negotiation. Some view these tariffs as a bargaining tactic by Trump to pressure the EU into a trade deal on his terms. Others worry that this marks the start of a more aggressive U.S. trade policy that could persist beyond his administration. If no compromise is reached, long-term economic disruptions could extend beyond Sweden, affecting global markets. For Swedish businesses, adaptability remains the priority. Companies are developing contingency plans, exploring new markets, and strategizing ways to navigate the uncertainty. Meanwhile, the government is staying engaged in EU discussions to protect Sweden's economic interests. Ultimately, Sweden's future trade relationship with the U.S. will depend on how the situation evolves in the coming months. As we continue tracking these developments, we'll analyze how Swedish industries are adapting, what countermeasures the EU implements, and whether a diplomatic resolution is still possible. Should Sweden fully align with the EU's response, or should it attempt to negotiate its own trade deal with the U.S.? How do you see this trade dispute playing out? Share your thoughts in the comments, and stay tuned for our next deep dive into Sweden's trade strategy. Thanks for watching, and we'll see you in the next video.